And today we're at the India Gold Conference here in Bengaluru. I have Mr. Shawn Fernandez from FinMet, who is the technical analyst there. Hello, sir. How are you?
All good. Thank you so much, Pvt.
Yeah. So if you're talking about gold and maybe silver as well, so what do you think are the future prices that we see? Maybe in the short term would be like 1 month, and maybe a long term maybe like 6 months time.
Right. So we are currently in the month of August, where we are very close to a Fed rate cut that it might happen in September. So you already see a lot of pricing in that has taken place in both gold and silver. Silver is kind of piggybacking on gold. Whatever price moves you're seeing in gold, silver is catching on to that. So currently, if gold is somewhere around 2,500, it's trending over there. In the 1 month post the release of the rate cut, and even after that, I think there's a good chance that 2,600 to 2,650 is a short-term target that the markets can expect. Now, obviously, there are concerns about recession, and if US is stable enough to support these rate cuts also that have we kept the interest rates high for too long that the US is going to be not be able to support the economy in terms of the labor, in terms of GDP, in terms of the other factors as well. So I think that you are going to see routine pullbacks, and they're going to be buying opportunities. Buy on dips is going to be the main strategy when these events do happen. So 2,600, 2,650 for gold. For silver, I would still say that silver would slightly lag back in terms of its own all-time highs. The 30 to 31.5 zone, that is where silver has struggled. In the past few months, if you've seen, there have been 2 to 3 moves that you've seen around this region, and then you see complete pullbacks because for silver, the demand also, there's a completely different angle with respect to gold that has to be factored in. So the 30 to 31.5 area, it's a very broad zone, but I think that is where we're going to expect silver to hit in the next 1 month. From a 6-month perspective, we're really talking about gold can reach the skies, right? Looking back in March, we never thought gold would hit 2,500, right? We thought it was going to be probably the end of the year. I would even say 6 months down the line, we are seeing 2,700 could be a possibility. Now, you could probably see highs more than 2,700 easily, but that's where the average price might settle around by the 6-month time frame.
So coming to gold, you told routine pullback. Can we see maybe $100 or $150 pullback, maybe, or where I thought before it hit the 2,500 mark, maybe gold could even come down to the $2,100 mark, because once it crossed the $2,100 level and the previous highs, which was maybe like 2,050 or 2,100, we just saw it just kept going up, and there was no proper pullback.
Yeah.
So once the pullback sets in, and once there is a bearish sentiment in the gold market, do you think that the prices might come back to the $2,100, $2,200 range?
Very, very low chances. I think what we're increasingly seeing is the market has accepted these high prices. You're still seeing demand at 2,500 and 2,400. Now, that is unheard of ever in the history of gold. So for markets to pull back all the way to 2,200 and 2,100, what you're saying is going to be very unrealistic, because you would really have to expect US markets to crumble and a lot of safe haven buying going into the US dollar to really see such levels of pullback in gold. So in my view, I don't think 2,100 would be a possibility.
So maybe in the next couple of months, or maybe a year, if we put it back to, there are like very slim chances of gold to coming back to the 2,100, 2,200.
Yes, I think we've already seen that the more, when there's a slight shock to the markets, like for example, 2 weeks back, somewhere in the early first week of August, we'd seen the payrolls data from the US, and that came in surprisingly soft, which means that not enough jobs were created in US as compared to what they had predicted. That really worried the markets. They really thought that maybe the effect of interest rates is really hurting the economy. But then you had some indicators came out later that kind of stabilized the markets. So those are the times when the corrections might happen again. As the prices pull over in the positive direction, that's when you might see some pullbacks if you see something similar happen in the coming few weeks.
So coming to silver now, silver actually the demand side is very good.
Yes.
And silver is actually used in the industrial segment a lot as well.
Yes.
And they're trying to incorporate silver much more in the solar panels, in the photographic events, and many other places.
Yes.
So what do you think, can silver come back to its $50 range maybe in the next couple of years or 5 years down the line?
You said $50 range?
$50 range. Because the last previous highs was like $50 range, but it was like 10 years back.
Yes.
Or like I think 10-12 years back, if I'm not wrong.
It is very hard to predict like that, and I wouldn't want to commit or give an indication that might be possible. But no, I don't think That's the outlook that I currently have for silver.
Okay.
I usually tend to look at gold to get an indication of what might happen in silver, and obviously silver has its own ecosystem to monitor as well. I don't think
So okay, if we are not talking about the higher ranges of silver, let's talk about the lower ranges.
Okay.
So where can silver max to max go till? Like what is the downside?
Yeah.
Max to max like drawdown which we can see in silver.
Two levels, I would say. One is 26, and another one is somewhere around 24. Right? So these are some of the two levels. In fact, you saw just a week or two back, 26 is where you saw it really stopped, and then you saw fresh liquidity and fresh buying taking over the market. So just like how I was saying that the market is accepting these prices in gold, you are seeing at the 26 zone, a lot of buyers are willing to buy in silver and really take the prices up.
So just like maybe a gist of how you see as a technical analyst, how do you see the charts and how do you see prices in a different way rather than the normal macro factors or the fundamental analysts see?
Yeah, so this is maybe slightly an interesting aspect. So I've actually built a tool which is based on an AIML algorithm, which is able to take historical prices of gold and silver and forecast what the outlook can be for a given term. So if you have an intraday outlook, or if you have a near-term outlook, or if you have a medium or long-term outlook, depending on your outlook, we can give you a fair sense of the forecast. The model is about 60% accurate, and that's one of the main things that I use to sense check whether what I'm arriving from the technical indicators is giving me the same indication that the forecast tool is also giving me. So that's something that is very specific to FinMet. It's an internal tool that we use to guide our clients for pricing decisions. So when we get calls from clients like, I want to know कि एक हफ्ते में क्या होने वाला है, what is going to happen in the next 1 week, we immediately use our tool as a reference. We try and understand, okay, is the tool making sense in terms of the predictions, and is the technical indicators also giving us the same picture? If both are giving us a confidence, then we go ahead and give the recommendation to clients that this is going to be the possible price up.
So when you give a recommendation to a client, is there any stop losses which are involved in it, or are there just like you देखो सर आप इस लेवल पे बाई कर लो, अगर इस लेवल पे आ गया तो क्लोज कर दो, और अगर ऊपर के लेवल्स पे गया तो?
Correct. So I think what you're referring to is, we do provide support and resistance levels, and we just give a general view of the direction of the trend. So if a client calls me up today, he wants to know whether the markets are going to go up, down, or remain the same tomorrow. And if it goes up, till what it will go up, and if it goes down, till what it will go down. So these three pieces of information is what we give. ऊपर क्या नीचे, अगर ऊपर जा रहे तो कितना, अगर नीचे जा रहे तो कितना. That's all we provide to just make it simple and to not flood the client with too much information.
So,
and we then let the clients decide how they want to position themselves.
So when speaking of FinMet's clients, are FinMet's clients mostly speculators in the market who just want to trade and make money, or are there hedgers or jewelers who want to actually hedge their jewelry stock which is there in the...
Correct. So most of our clients are in the jewelry sector. They are mostly jewelers who are looking to understand how to cover their positions before the weekend comes. Should they cover off today itself? Should they wait after the weekend has passed? I think these are the specific decisions they are interested to take, not just before a weekend, before a key event comes, like before Diwali comes or before a proper event comes. They want to understand कि मुझे अपने आपको position कैसे करना है. So these are the reasons, these are the cases where clients would look to us to help them with the pricing decisions.
Thank you so much, Shawn.